What's up, guys? Good morning. Early morning video here. Palantir just released earnings. The stock's down about 10%, but at this point, retail investors are not able to pre-market trade. So it'll be interesting to see how it plays out. So we can see revenue growth 41%, not bad at all. Commercial revenue up 102% year over year. Now that's really good. That's what we want to see. We know that their federal and their government business is doing fine. But we know that the future growth is really going to come from that commercial segment. So 102% solid. Now, at first glance, the one thing I noticed is earnings per share missed. The earnings per share were 2 cents versus a 4-cent estimate. The rest of these numbers look pretty good. I want to go through some of the highlights. So total revenue grew 34% year over year. Commercial revenue, 47%. U.S. commercial revenue grew 132% year over year. The government revenue, that's where it's a little bit slower. They've been around for a while, 26% year over year. They added 34 net new customers in Q4 2021. They had a loss of operations of 59 million, representing a negative 14 margin. And so this is, in this kind of environment, it's not surprising, I guess, to see the stock down, especially before retail is able to trade it. So it's trading right now in the 12s. Of course, the high was much, much higher. And this opened as a direct listing around $9. And I remember we first bought it in Discord around $9. I've added along the way. And I'm interested in adding more. I still have more shares that I can add to my position on this stock. Palantir's always got really nice marketing. This is the deck, this business update here, February 17th. So it just came out minutes ago. You can see some of the numbers we just talked about, that 34% total revenue growth, 132% commercial revenue growth, 80% GAAP gross margin. So adjusted free cash flow, actually, $104 million. I mean, the company's doing pretty well. It's just that earnings per share miss that we talked about earlier. So TAM expansion, you can see how they've grown from 2013 to 2021, and they've got 2022, 23, 24. So you've got your Gotham, you got your Foundry, and you got Apollo, and you can see they're continuously adding new products. I'm excited to see what they start doing more with crypto. That's going to be really exciting. There's just lots of great stuff going on with this company. Here's some of the new products released since DPO. So Edge AI, HyperAuto, Cosmos, you got Meta Constellation, Titan, you got the Apollo for customer SaaS. Our customers are saying Foundry is to app developers this decade what AWS was them to last decade. So you can see Airbus and Merck and some pretty big customers in here. This is what I want to show you really quick. This is key. Focus on customer growth. Look at this here. So net dollar retention, 131% for 2021. 131% is very solid. So that's taking their customer base, essentially keeping the customer base and increasing more products, selling more to their customer base. 131% in the SaaS world is very good. Total customers grew 71%. You can see 139 all the way to 237. So definitely growth in the customers. They're keeping the customers. They're growing the customer base. You can see commercial momentum. This is huge, guys. FY 2020, only 49 commercial customer accounts, and this is the future. This is where that future growth is going to come. 200% growth from FY 2020 to FY 2021. That's massive right there. The US commercial momentum even bigger, 132% in Q4 2021. You can see it's ramping nicely, 72%, 90%, 103, 132. This is what we want to see as an investors. 371% U.S. commercial customer account. So they're growing their commercial account, especially in the United States, from 17 to 80, 371% growth. And I think you're going to continue to see momentum there. U.S. commercial sales investments will fuel FY 2022 growth. You can see some numbers there. Commercial cohort growth. Lots of great numbers here. So this is non-U.S. commercial customer count, 109%. Now, listen to this stat. The government business, net dollar retention, 146%. That means those customers are sticky. They're keeping those government-related, those federal and government-related customers, and they're growing out. They're basically growing their footprint within these businesses. And as someone that used to sell SaaS, that's huge. You want to keep that customer, keep them happy, and have them add more products. And as Palantir continues to add more and more products, they're going to be able to expand even more and more, not only to their customer base, their current customer base, but also greenfield or new accounts, especially in the commercial space. So international government is 161%. These are huge numbers for net dollar retention, guys. Massive numbers. So total government's 146%, US government 141, international 161%. Big, big numbers. So gross margins, this is big. path to GAAP profitability. And you can see the margins have stayed pretty steady. It actually dipped a little bit last year in 2021. They're starting to creep up a little bit. So we got 83 and 80%. It was 84 and 78% back in Q4 2020 with a little bit of dip in the middle. And we know the stock price has been hit pretty hard. I'll show you a chart here in a second. So hold on, stay tuned. If you want to take a look at this, just go to their website. You can see it. Let's look at a chart real fast. So direct listing back here, September 2020. We bought this in Discord around $9. You can see it skyrocketed all the way up here. It got actually up to what, $44.89. That was definitely very expensive. Careful of FOMO there. And you can see it's come back. So let me zoom in here and show you what's going on with the chart. We traded in this channel for a while and it's dipped down, as you guys know. The bottom here was just under $12, so $11.78. Now in the pre-market, it's actually at $13, so it's hanging in there pretty good. It was actually down to around $12 and change, like $12.15 I saw a pre-market. So it is starting to hold up a little better here. So it's down 6% right now, pre-market $13.10. From a technical level, guys, I mean, this thing was looking pretty good. Obviously earnings, the fundamentals are always going to be most important, but this thing was forming a nice base. It looked like it was trying to creep higher. There was at one point it was getting pretty bad. It looked like the stock could go to $9 or $10, and I suppose it's still possible. You have this S2 here that's down $10.36. You've got this S3 at $7.66. So a stock can always go lower, but it was forming a nice base. We were starting to get buyers. This earnings, if the EPS would have maybe beat, you could have seen this thing pop 15-20% easily. From the fundamental perspective, it looked like it was going closer to $16 or $17. It's trading down right now, between 6%, 8%. I don't know what's going to happen. I mean, the NASDAQ futures are down, I think 0.75% right now, so that doesn't help the overall environment. But I do think this is a long-term opportunity, guys. I think this stock will continue to grow in its valuation. It'll get back in the 20s. It's going to be a long time before it gets back to that $45 all-time high. But in my opinion, this is a long-term opportunity. It's a very unique company. It's an exciting company. It got way ahead of itself, lots of FOMO. It's pulled back. These are much more reasonable levels here. I mean, if you can get the stock around $12, I mean, you can always dollar cost average and buy if it goes lower. But I like this one, especially if you're a long-term investor, you're trying to hold this thing 5 or 10 years. It's going to grow into itself very nicely. So I'm bullish. I'd like to add even more shares. And this is on my new 10. You can take a look at that. Check out the link below. There's a new 10 video you can take a look at. But I appreciate your time and attention, guys. Subscribe to the channel. Click the like button. Drop me a comment. Have a great day. Take care.